This video and all other videos on this channel are for entertainment purposes only. The content of this video and all other videos on this channel are the opinions of the creator only and do not constitute legal, trading, investment, or financial advice of any kind. Investing carries a high level of risk and the majority of retail clients lose money. Do not invest any capital unless you understand the risks and you are prepared to lose it all.
Alright, hello and welcome to Camel Finance. I'm your boy Camel, and I'm not going to be posting a video tomorrow, so I thought I would make a brief one today and then relax for a couple of days, take a few days off. And really nothing has changed, right? We're still aiming at early Jan timeframe to see some cycle lows across the board. I have a sneaky suspicion the metals might be firing one slightly sooner. But either way, we'll do what we always do on this channel, which is find and trade the cycle lows. Before we get into today's episode, I think I know who it was, but I'm not 100% sure. But whoever it was that sent my dog a Christmas present, a nice little toy, thank you very much. I really appreciate that, and he really liked it as well. So today I want to talk about this, right? I want to show you that 2025 could well be quite a wild year. I'm going to point at a few Bitcoin things because I'm pretty sure we are as close as we've ever been to finding a cycle low for Bitcoin. And of course, that is for me at least a tradable low. Then I want to talk about Bitcoin dominance and gold. So Apollo just published their biggest market risks for 2025. And between potential rate hikes, a recession in China, a 40% chance of the 10-year note yield at 5%, 2025 is probably going to be quite volatile. So they see tariffs coming with a 90% chance. The GDP impact of tariffs is estimated to be negative 1.7%, but tax cuts are possibly going to be able to offset that. And Nvidia is expected to miss earnings with a 90% chance. And Nvidia has contributed 20% of the S&P 500's returns over the last year. So if we start to get misses, major tops come in for Nvidia, then again, we could be in for a little bit of volatility into 2025. And also, Nvidia has a third angle violation. So if it can hold the second angle and maybe continue to print higher highs, then no reason to be super alarmed. However, if what we get here is what normally happens after a third angle violation, which is a grind and another breakdown, especially coinciding with perhaps earnings misses, then the S&P again may well be in for a bit of tough times ahead. They also give a 85% probability that the US economy re-accelerates. GDP growth in the US has remained around 3% and will likely accelerate in 2025. And this will come as inflation rebounds and monetary conditions have eased. They say inflation will remain a major issue in 2025, and it's already becoming apparent. As I'm sure you're well aware, I disagree with this, but once more, time will tell. They say there is a 40% chance that US inflation accelerates in Q1 of 2025. See, 40%. So even according to them, deflation is higher risk, right? Or at least stagnating inflation. I think this is all going to become very apparent very early in next year, but they think this is the biggest risk in 2025. We get another spout of inflation. They also see a 40% chance the Fed hikes interest rates. If you ask me, it is essentially zero. Everything is a non-zero possibility in markets, but I really think it's as close to zero as we could get that they're going to continue to hike rates because they're already behind the curve. However, if I am wrong about this, then maybe, just maybe, we could see something absolutely wild where they start hiking rates again. Either way, we're going to see volatility, I can assure you of that. And of course, the 10-year note yield rises above 5% before mid-year. They give this a 40% chance. I mean, it's almost there already, right? It wouldn't take much to see that. And the weird thing about the 10-year note is since the Fed pivot began, the 10-year note is actually up 100 basis points. So under the hood, some weird stuff is going on. And they also see China entering a recession with a 40% chance. They also state that there is a 0% chance the United States enters a recession. So, I mean, one of us is very wrong here, right? And lastly, they are watching the housing market in 2025 because despite the Fed rate cuts, the average 30-year mortgage rate is back above 7% and nearing a new 52-week high. Mortgage demand will likely hit new 40-year lows. So as you can see, there's a lot of weirdness going on. Let's call it weirdness. There's a lot of conflictory or contradictory things being said. Of course, as always, no one really knows, okay? But the good news is we can take a couple of weeks off, come back early Jan, buy some cycle lows, and then continue to ride the waves of insanity during these wild times. Speaking of wild times, MicroStrategy somehow managed to buy the absolute top at 106k in size of 5,260 odd Bitcoin. And Bitcoin, as I've been talking about for a long time, is getting closer and closer to that cycle low. You can see we have followed this thing pretty well. Okay, here's a more updated version. You can see that we are inside the timing window now to find a daily cycle low. So anytime early Jan, and I think we should be able to get a tradable swing. I think you'll see me get a long on out of there, and you'll be seeing me target north of 150k for the top. To give you a couple of ideas of how this low could form outside of the cycle idea, that we also have this ABCDE from Kushi, where we're looking for a slight undercut early Jan, and then a big reversal, shakeout, and one final leg to the upside. Nesty here shows that just like we had this A, B, C, D, E here with a higher low, maybe that's what we're going to get from over here. In either case, it doesn't make much difference to me from a cycle perspective, because if we do get a higher low, then it's the same trade idea with a stop below that swing. It's just that it would be much easier for me to identify if what we get here is one final undercut to a lower low. That's just makes everyone's life a little bit easier. But we've played plenty of higher low cycles before. And so as you can see, we are chilling out, right? We're waiting patiently for a nice tradable swing to form on Bitcoin, and then we'll get behind that. We'll get behind some crypto stocks in the members section as well. Before we get into the charts, which are also showing early cycle lows in other asset classes for early Jan, I wanted to point at this, okay? Because I woke up this morning, I scrolled Twitter as I always do, and I noticed every man and his dog has got the same fractal. Now, that does not mean this is not correct, okay? We certainly maybe have just completed, let's say, 1 into 2, looking for 3, 4, and 5, okay? And during this time, of course, we would expect a nice big alt season. But one thing I wanted to just point at, and out of objectivity, make a note of, is I don't see anybody calling for this. And I also don't see anybody calling for this. All I see is 100% of market participants saying this is the only path. And the funny thing about this is, those same market participants were calling for this from here, from here, from here, from here, from here, the whole way up. And now all of a sudden, they've just started to pretend like they never were calling for it to break down until now, okay? So I just wanted to kind of point at this and say, if it plays out, okay, as you know, I don't have a dog in the fight, I don't mind either way. But usually when you see 100% of market participants calling for the same thing, okay, then it means something else is going to happen. And I don't know which one of these three things is going to happen, but I just wanted to point at that and ask you the question, right? Do you see anyone calling for anything other than this? Because this seems 100% certain in markets, and whenever everyone is 100% certain, then someone ain't thinking, right? And then before we hop into some charts and say goodbye for the Christmas period, here is a really, really nice example of gold on the monthly time frame, targeting 20k. This is what I think is on the table, and I know a lot of people really don't care about gold. I know a lot of people think this is some kind of boomer rock, or that Bitcoin's going to demonetize it and all of this stuff. That's fine, okay? I'm not trying to sell you anything. I'm not trying to tell you to buy it. But I believe this is very much in play. I've been consistently saying this is very much in play for the entire time I've had my channel, and I've been very consistent in saying I'll be really surprised if we're not trading 5 figures by the end of this decade, which is now, of course, only about 5 years away. I very much expect this to play out. I suspect over the next couple of years that I have this channel, you will see me start to trade the precious metals, mining stocks more and more. I think I'm slowly but surely going to be evolving out of a stock market trader and into a commodity trader. There have been times in my career when I've traded all sorts of different instruments, primarily. Of late, we've been mostly trading stocks and crypto, since that's where the easy money has been. But I do believe that over the coming couple of years, you are going to see me pivot to becoming much more of a commodity trader, because I really do believe the stock market is not going to be able to outperform these types of moves. So for now, hard to argue that this chart is not beautiful if you're a chart nerd like I am. Also fits my base case. So hopping into the charts, it's the exact same setup that we're looking for in the stock market as to Bitcoin. So far, if we draw our eyes to this upward sloping red, we've got breakdown, possible retest, resumption into that cycle low. Now this would also notice complete a 2 drives pattern into a cycle low, which is very, very typical for the stock market. And also it's the easiest to identify pattern. From an Elliott wave perspective, I also think this would give rise to an ABC. Again, it would just be much easier to identify. We'd be able to get this long on out of here. As ever, a trade setup has to have an invalidation. And so that is what this downward sloping red resistance line is. If indeed we forced an early cycle low here, and it would be quite early, that would only be day 33, versus if we were to run this into day 40-ish, that would give us a new low right around the same time that Bitcoin is due to put in its cycle low. And so on a balance of probabilities, we can say with about a 70 or 80% probability, we will be seeing a low into the early Jan timeframe. And of course, if we get that, then happy days, long and strong. If we don't, and we do have to entertain this as an early cycle low, then the trigger for that would be a trend line break up here, ready to catch any legs to the upside that may or may not be left in these markets. On a balance of probabilities, though, that 2 drives, that cycle low early Jan, makes a lot of sense. And it's really the same deal for the NASDAQ and the Dow. We expect 2 drives into a cycle low, followed by getting long out of that swing. We expect the same thing from the Dow, some kind of rejection at resistance, one final undercut and go. And of course, invalidation, the same as ever, is if we break out early, then we get long, we put a stop below here, and we look to ride this wave and see what the market will give. And the last thing I wanted to touch on are the precious metal markets. They still are missing one component, and that component is a new lower low. On a balance of probabilities, there should be one final move to the downside here, just to take out that low, just to run the stops, and then it should be time to turbo reverse. And again, we will be capturing that in the members section. Same deal for silver. Silver's actually playing ball, right? It's got the lower low, and it hasn't even confirmed the low probability breakout with the steep trend line yet. So I would think possibly one more low, and we'll look. If silver's going to lead here, though, we'll have to take note of that. And the miners, I usually reserve these kind of mining ETFs and stuff for the members, but you can see they're also telling us that this move has been expected. We drew this yellow squiggle all the way back here sometime in September, and you can see, largely speaking, things are going according to plan. So find a low, tradable swing, get some breakouts, and then it should be time to conquer the precious metal markets. And for Bitcoin, I don't know if I've already covered Bitcoin, but no real changes, right? Looking for that cycle low. We're getting very, very close. Wherever it forms, early Jan, we'll get behind some longs. We will set a third and final blow off top angle, and then hopefully that fourth comes in. So I'm your boy Camel. I hope you have a fantastic holiday period. I'm going to be chilling out, waiting to see if we can get a nice high probability setup in a form of a 2 dries pattern across the board. Of course, if you're a level 3 member, I'll notify you in real time when I think we got tradable swings in. For everyone else, have a fantastic holiday. I hope you're doing well in life. And until next time, take care from me. All the best. Cheers. Bye.
Camel Finance, he's the man to see. Rocking the markets with his contrarian spree. Trades like a pro, no fear, no shame. Sticking to his guns in his money game. He's a badass, oh yes indeed. Camel Finance got the markets key. Taking us normies on a bump.